B Street sustains momentum with the Nifty above the 26K mark, on track to end the week slightly lower. Broader indices see a healthy outperformance with metals soaring in trade and real estate stocks lending support. IT sees some breather, but real estate stocks remain under pressure. The rupee tumbled to a fresh record low, sliding past the 90.56 against the dollar after comments hinting an India-US trade deal may only materialize by March 2026. Risk-off sentiment and stronger importer demand for dollars added pressure. Honasa is stepping firmly into men's personal care, acquiring 95% of VTM Ventures, which is the parent of Reginald Men, at 195 crore rupee valuation. The deal gives Honasa a fast-growing South India-focused brand. Sources say SEBI may review the mutual fund industry's feedback on the proposed TER cuts at its December 17th board meeting. The industry has submitted detailed recommendations seeking softer reductions and a rethink on capping brokerage at 2 bips for cash trades. Indian exporters have urged the government to fast-track the trade agreement or preferential trade talks with Mexico after its Senate approved steep tariff hikes of up to 50%. Exporters have written to the Commerce Ministry, warning the tariffs could hurt sectors including autos, machinery, electricals, chemicals, pharma and textiles. Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. Let's quickly pull up the Nifty and let's see how we're shaping up for the day. 0.5% higher on the Nifty 50 index and holding up very, very well actually. When you're looking at some of the gainers, Hindalco among the top, but Tata Steel as well, Eternal, L&T are all among the top gainers of the day. L&T, that upgrade by Goldman Sachs, obviously leading to this 2% move on the stock. But outside of that, steel is as well as metals are surely in favor today. You're seeing a 0.25% higher on the Nifty Bank. The mid-cap and small-cap indices seeing a lot better traction than we have. 1% higher on the Nifty mid-cap as well as maybe 0.75% higher on the Nifty small-cap. The Nifty Auto Index is up 0.5% after it being the top gainer in trade yesterday. And within the sectoral indices as well, you're looking at a healthy rally in the Nifty Metal, 2.5% higher. Nifty Realty also up 1.2 odd percent. And oil and gas is up 1% as well. So that's among the sectoral indices. Those which are not doing as well, the Nifty FMCG was soft yesterday, continues to do so today as well. And then we have the Nifty PSU Bank, which is absolutely flat in trade today. Let's talk about some stocks which are doing fairly okay in the market. Well, you're seeing HUL as one of the key losers on the Nifty 50. The other one is Asian Paints, so consumption focused. ITC also down 0.6 odd percent. Within the Nifty, the consumption focused names are what is dragging the index. Overall, the advance decline, at least on the Nifty, seems fairly healthy. 35 advances to just about 50 declines. And when you're looking at the Nifty 500 universe as well, or maybe the Nifty small cap 250 also, the breadth is positive, but the Nifty 500 also, the breadth is fairly positive. 351 advances to 146 declines is what we're seeing on the Nifty 500 index. So the market breadth surely in favor of the bulls. Some of the big gainers, a Tarrell and Anantraj, can we pull those up? A Hindustan Zinc, Hindustan Copper, Nalco, Choice International, GMDC. So out of the top 10 gainers on the Nifty 500, at least 5 to 6 are metal names that we can see. Also, Kane's doing well in trade. The bounce back in that stock is evident. PNB Housing, IKS and Swiggy are just some of the other big gainers in trade today. In terms of the losers, Siemens, Tata Motors Limited, PI Industries and OneSource and Gillette all losing over 2% each. Kunal, what are you seeing on in the market today? How's the trend that what's the trend that you're spotting, and your thoughts on the move of the market today?
Well, this is a very good market, and you know, frankly, this kind of a market, indicates that we've shrugged off all the kind of negative volatility, the fear for the markets in terms of tariff, etc., in just a matter of, I think, a day. Because you look at the quality of stocks, And so many sectors today have gone to a revival. Metal stocks have gone to a good revival. Where you've seen many of the metal stocks coming back to either their life high levels, case in point the likes of Vedanta, etc., or some of them are going to a very strong resurrective mode like Tata Steel, etc. You look at other sectors where you've seen pharma stocks making a comeback for themselves. Reliance Industries showing signs of strength. PSU names, BHEL, etc., they've shown signs of good recovery from the intraday zones. So I think, and then short covering across names like Keynes, etc. So that indicates that the markets are quite white textured today, and we are trading about the 26,000 mark on the Nifty today. So that's another positive, which I believe that the markets will take away for the next week. So I sense that today's closing, hopefully if we close at these levels, I think that should be auguring very well for the index over the near term. And then we could be looking at now 26,250, 26,300 as the next target for the Nifty in the next week.
Okay. And so that's, of course, Kunal's take. Kunal, one stock in particular, Swiggy, up 4% today. Now we've seen, the quick commerce names, both Eternal and Swiggy, come back to the fore over the last couple of days. Again, today, Eternal also doing fairly well for itself. Is this a trend you expect to last all through next week as well, and therefore an opportunity at this point?
I guess so, because as I was pointing out earlier, that I think it's a good revival for many of the stocks which have come back from their previous swing lows. Same is the case with Eternal. We've been mentioning that 285 broadly is a good support point for the stock price, and that should be taken as an opportunity to buy, accumulate, add further for the stock, because you don't get these 20% odd corrections for stock prices. Of course, they happen on the back of news flow, but then broadly, I think that should be taken as an opportunity. This breakout which you're seeing for Eternal, Swiggy, etc., I think I would sense that it should have more legs on the upside.
Okay, more legs on the upside for those. What's the kind of level that you're looking for, say, on a Swiggy, Kunal?
For Eternal, I would expect at least a 310 to 308, say in the next week. So that should be a good 3 to 4% swing returns for the stock. And for Swiggy, I would expect at least a 435, 430 kind of a range. So potentially another 4% on the upside.
Okay, all right. Rabinder here, with all of the stocks that you want to keep on your radar on the back of corporate announcements. Rabinder, what do you have on your list?
Pressure on the back of their income tax department has conducted a search operation at the register office of the companies and other location, and the search operation has commenced from the December 9 2025, and search operation were still underway, but no official communication has been issued either by the authorities or by the company. So back of this, reflex industry is in focus, and the stock is down to more than 20% with lower circuit. PI industry, another stock under pressure, where QMI, which is a major client of the PI industry, has cut their guidance, where they now they see a 5% decline in the revenue growth in FY26, and QMI also see a 32% fall in FY26 operating profit. So back of this, PI industry is under pressure. JSW Energy is buzzing, where JSW Energy Utkal, which is a subsidiary company of the JSW Energy, has signed a power purchase agreement with multiple Karnataka's discoms for the supply of 400 megawatt of power, which is starting from the 1st of April 2026 for a tenure of 25 years at a tariff of 5.78 per kWh. And GMDC is also in focus, where company has acquired 3 coal blocks in Odisha, with the Bitonary West coal mining emerging as a most value accretive asset owing to the scale and a geographical potential. So back of this, GMDC is also buzzing. And if we talk about some of the stocks that are in action on the back of the action in the commodities market, first is Hindustan Zinc, where silver has crosses a record high level of $64 per ounce for the first time ever, and silver is up 10% on a MTD basis, and 20 to 25 percent of revenue comes from the silver. So back of this, Hindustan Zinc is also in buzzing. Another stock is focused on the back of the action in the commodities market, that is Hindustan Copper, where copper at international market is all-time high, and copper is up approximately 9% in last 1 month. Thermex is also in buzzing on the back of the positive brokerage note, where Kotak Institutional Securities has upgraded the stock to buy from the ad rating with target price rupees 3,575. And lastly, Lupin is also in focus, where Lupin Manufacturing Solution, which is a subsidiary company of the Lupin Polypeptide, has announced a strategic alliance to scale global peptide supply chain. And this collaboration aims to enhance supply chain resilience, improve operational efficiencies, and accelerate the readiness for the rapidly expanding global peptides market. So back of this, Lupin is up more than 1.5%.
Excellent. Okay, thank you so much for that, Ravinder. But moving on, sources tell ET now that the cabinet may approve the nuclear energy bill. This bill may open gates to the private sector in the nuclear energy sector. Samir here with more details on this one.
So very important cabinet meeting which was scheduled to start at 1 o'clock, and some key decision that will be taken in the cabinet. What we are picking up from our sources that one of the big decisions will be the renaming of Manrega Yojana. So Mahatma Gandhi National Rural Employment Scheme, this entire Yojana is likely to be renamed, and it is likely to be named as Puj Bapu Gramin Rozgar Yojana. That's one. Second is that the cabinet is likely to approve the Nuclear Energy Bill 2025, and this bill is important in the context that if approved and if everything goes well, as per the intent of the government, this bill will open the gates for the private sector in this nuclear energy. The entire sector, the private entities, the private player will be encouraged to participate, and this will help to ensure the requirement of the country as well. In addition to this, we are also picking up from our sources that the MSP of copra is likely to be hiked. It will be increased significantly, and that will be a much relief to the farmers as well. In addition to this, we are also getting to know that higher education bill might be approved by the cabinet. Now, the key highlight of the higher education bill is that it will bring the different regulatory bodies, whether it be the University Grants Commission, AICTE, and the other regulatory body under one umbrella. And government understands that the proposed higher education bill will help to reduce the bureaucracy, enhance the quality and the credibility of the entire education system in the country. So these are a couple of important bills which might be passed through the cabinet and which will help to the sectors ranging from nuclear energy to the education sector.
Okay, thank you so much for that, Samir. But let's pull up some companies within that power space. Let's look at what's happening with an NTPC. Whether there's absolutely any move on that counter. There you go. Okay, 0.7% higher. So no major moves. A Tata Power, a Jindal Steel and Power. Let's pull up some of those counters and see what's happening. There you go, 0.5% higher on a Tata Power as well. But frankly, no major moves as a result of this. Kunal, let me come back to you with regard to sectors that are standing out, and within that is the metals pack, 2.6% higher on the Nifty metal. Not sure the last time I saw this kind of a move within metals. What's standing out for you?
I think there are, why today's move is very important for the Nifty Metal Index is not just because of the price jump the index is showing, but I think it's the variety of the stocks within the metal pack, which I think is making the trade a little bit more attractive. So you have the outperforming names, the likes of Hindalco, which has now come back towards the life highs or very close to that kind of a point. Vedanta has been doing very well, which has been erstwhile a very volatile stock. So that stock is trying to come back into its own, at least in terms of the outperforming spree. And then you have the likes of Tata Steel, etc., which is also showing signs of very good recovery from its previous lows of 160. So I think the mixture of the metal stocks is something which is attracting the market participants today, and that's why I would believe that when you have such kind of a mixture where number of stocks open up when the sector goes into a rally mode, that generally augurs that you are looking at a trend in the making for metal names. So bullish on the metal counters over the medium term. However, after today's move, you have to be a little bit more on the wait and watch side, maybe for another day or so. If you get these stocks maybe 0.5%, 1% out on the lower side, then I think it becomes a good buying on dips territory. But yeah, this signals that we are looking at a trend breakout for many of these metal counters.
Okay. Kunal, with regard to Tata Steel in particular, we've seen the stock rally to 185, 188 levels. Thereafter, we've seen a sharp pullback towards maybe the 168 kind of 165, 168 kind of mark. How quickly can we expect a move on this one back and maybe clocking its all-time highs? What's your sense?
See, in the morning, I'd given a buy on Tata Steel because my expectation was that the stock would come back into a revival phase because it was extremely oversold. Divergence on RSI, oversold RSI on the hourly charts, and the stock had to come back towards its previous swing high, which was just around that 172 levels. Now that the stock has done that, it's come back to that 172 mark. I'm expecting that the stock may just about for the next couple of days go into a pause. So that time-wise, calculation may probably get extended if the stock gets into a phase of a minor consolidation. And as it is, we are into a market where momentum stocks for a couple of days, when they rise up higher, they eventually see some bit of cool off or rest before they tend to pick up pace. So I think even in that sense, I believe Tata Steel would eventually make a comeback. So metal stocks, metal counters are going through a big breakout on the medium to longer term charts. Potentially, if you ask me, I think over the next 1 month or so, I would expect Tata Steel to make a comeback to that 185, 188 range.
Okay. What we'll do is slip into a very short break. On the other side, we'll take Kunal's picks. Actually, that one is pending. So stay with us here on ET Now.
Fly parrot.
माही भाई कोई कूल बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
Presented by AGS Federal Life Insurance. हर वादा मुमकिन।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Park Medi World Limited proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price of rupees 154 to rupees 162 per equity share of face value of rupees 2 each. Bid offer opens on Wednesday, December 10th, 2025. Bid offer closes on Friday, December 12th, 2025. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
Watch exclusive highlights from Maharashtra. Maharashtra's winter assembly is underway even as the state empowers agriculture and industry through technology. Here's what's making news and why it matters in Maharashtra 360.
ICICI Prudential Asset Management Company Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 2,061 rupees to 2,165 rupees per equity share. Bid offer opens on Friday, December 12, 2025 and closes on Tuesday, December 16, 2025. For risk factors and other details, please refer to the red herring prospectus dated December 5, 2025. Available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
इतने में क्या ही मिलेगा यार? सोना। तू ठीक तो है ना? अरे गोल्ड ETF. All you need is 200 rupees or less.
Gold ETF. It's आज का gold, regulated and backed by real gold. All you need is a Demat account.
सोच रहा हूँ टर्म लाइफ इंश्योरेंस ले लूं ताकि मेरे बाद फैमिली को पैसों की कमी ना हो।
तू भी ले ले।
अबे जल्दी क्या है? बाद में देख लेंगे।
आराम से। अब तक कुणाल को हार्ट अटैक आ गया यार।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू। We are everyone, but we are not just anyone. We choose progress over pressure. We say no to shortcuts and yes to the strength of discipline, to the pride of planning, to the thrill of watching our future take shape little by little. We are citizens And you can be one too. SIP karo. Citizen bano. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
चलो चलो AI से पूछते हैं. Do fish get thirsty? If AI will use so much energy, then what is the future of energy?
Infinite clean energy. Avada, always clean, always on.
Anytime is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold, and silver through one fund.
Mutual fund investments subject to market risks. Read all scheme-related documents carefully.
अपने दिल के हिस्से की सेफ्टी से समझौता? नो चांस। इसलिए पॉलीकैब ग्रीन वायर्स, जो है लेड फ्री और इमरजेंसी में दे कम टॉक्सिक गैस। पॉलीकैब ग्रीन वायर्स, इंडिया सेफ हैप्पी कनेक्शन।
Rohit, we need to talk, okay?
Yes, sir. That's Air India now.
Welcome back, and we're joined by Aditya Kondawar, partner and vice president at Complete Circle Capital. Great having you, Aditya. Give us a sense, first off, to start off, how are you viewing markets? How are you viewing the Nifty levels versus what the likely growth could be maybe over the next year or two on the Nifty in terms of earnings, which could likely lead to the 1 or 2 year forward earnings, giving us a possible upside surprise. Give us a sense of that.
Hi, Harshbhai. Good afternoon to you and all your viewers. Thank you for having me. So, getting to Nifty, right? I mean, of course, the past 14 months have been quite, it has been a roller coaster ride, to be very honest, right? And I mean, going forward, if you look at the Nifty PE today, it is close to 24 times, which is closer to its average. Now, if you look at the next 2 years, we are baking in anywhere from a 10 to 12% that will be the EPS growth. And I think, Harshbhai, we will see a lot of, we genuinely feel that we will see some surprises over here. If you take the banking sector, for example, I think it is long due. A lot of exports-oriented sector, which have faced almost 50% tariffs for the past 3 to 4 quarters, I think they will surprise. If you look at manufacturing and a few other manufacturing-oriented sectors, I think a lot of capex is coming in, and a lot of companies have given aggressive guidances for the next 3 to 5 years, right? So I feel definitely, the earnings surprise can come from banks, manufacturing, auto and auto ancillaries, because as we all very well know, the government has also done its part by cutting a lot of these taxes and spurring consumption in the economy.
So all right. So Aditya, you've given us sectors as well to think through. Kunal, let me ask you, within the banking pack, given the moves this week, and Kunal, it's surprising that we haven't spoken about banks, is just what I recall over the last few days. But within that banking pack, any chop and change in terms of your top picks or your top bets?
Yeah, I think now it could be a time where large cap private sector banking stocks could make a comeback. So, a few of the ratio charts are now indicative that the private sector banking stocks could stand to outperform the PSU banking names. We are seeing traces of that happening. Axis Bank coming back to its previous swing highs. Kotak Bank yesterday was one of the top gainers on the Nifty 50. So that is another candidate. ICICI Bank is now trying to come back to that 1375, 1400 kind of a range breakout. HDFC Bank very close towards its previous highs of 1020 thereabouts. So now you are looking at a point where many of the larger cap private sector banking stocks could potentially outperform the PSU banking names. And if that happens, of course, for the bank Nifty, it will be very positive. But this will also help the bank Nifty to be a lot more constant and varied, because in the last 3 months prior, even though the bank nifty was moving up higher, it was solely on the back of some stupendous outperformance from the PSU banking names. So now with the private sector banking stocks make a comeback, this would give far more stronger stability for the bank nifty trends going forward.
Okay, Kunal, we need to let you go. So thank you so much for joining us. Have a great weekend.
Thanks.
And viewers, what we're going to do is slip into a very short break. On the other side, we'll continue coverage, plenty of buzzers, and we'll discuss those with Aditya as well. Stay with us. Welcome back. You're watching Closing Trades, and we have with us Aditya. And in fact, I've thanked Kunal a wee bit too early. We're going to get some insights from Kunal with regard to silver and that big move with regard to silver in just a few minutes. But Aditya, if I were to come to you, talk to us about one sector. You've named quite a few, but talk to us about that one sector where you have the highest conviction on, and within that sector, within that pocket. Is there a tilt? Say, for example, within banking, is it private sector banks and is it the larger ones? Give us a sense.
Sure. So, Harshbhai, obviously the first sector that I'm going to talk about is the banking and financial services sector, right? Whenever we talk about an economy doubling to a $7 trillion or in the markets and raise equity, credit is the backbone of every economy, be it China, be it US, and of course, be it India. So, the leap that we will do to $8 trillion will be facilitated by credit purely, right? So, as India goes to $8 trillion, you will see more and more people take house loans. You'll take more and more people take retail credit, more and more corporates borrow for their capital expenditure in the economy, right? So in the banking space, of course, we do like private banks. Some of the PSU banks are also looking quite good. And, the best part, Harshbhai, over here is that, not just us, but even the FIIs have been taking very large positions and very bullish bets over here. If you go by the news flow of the last 3 months, we have obviously seen the biggest banking deal by Emirates NBD in RBL Bank. Then we have seen the IDFC First Bank deal. We have seen it with Shriram Finance, Samman Capital, right? So, I feel that, not just us, but even the FIIs are thinking that, this is going to be, the credit is going to be the sector that will actually propel India to a $8 trillion or a $10 trillion economy for that matter of fact. And just a fun statistic over here, if you look at the balance sheets of banks that are listed in China, they have a balance sheet size of almost $6-8 trillion. If you look at the listed balance sheet bank sizes in the US, it is almost closer to $5-6 trillion. But in India, we don't even have one bank yet which has a balance sheet size of $1 trillion. So if I combine the balance sheets of, say, HDFC Bank and SBI, then you get a $1.1 trillion bank, right? Now, the second one is, of course, it has to be manufacturing because, I think India has done quite a phenomenal job over here. And I feel that not just the OEMs, but...
Aditya, I'm going to interrupt you there. We'll come to manufacturing in just a couple of minutes. We have Kunal standing by. Silver continues to dazzle and massively outperform gold, right? With gains of more than 100% for the year. Analysts say the metal is now overbought on quarterly charts. So how long will that sheen last? Kunal here, of course, to break this down for us on charts.
Thank you so much for that, Harsh. It's mesmerizing, frankly. I think that's the best word to try and summarize the move which we've seen for silver in the last 6 odd months. But then what was the reason why silver started to outperform gold? And I'll throw in a very interesting perspective. This is more of a statistical rally which has happened for silver with respect to gold. Now, if you go back just about 6-7 months back, April 21st, 2025, you look at the gold and silver prices in terms of dollar terms, gold was almost at 3,400 levels, silver almost $30 to $33. Interestingly, the ratio for gold silver at that time was almost 104, 105. This was almost equal to the 3 standard deviation bands in terms of outperformance of gold with respect to silver. Now, these are abnormal outperformances which you see in stock prices in asset classes when they go into 3 standard deviation bands. And then they tend to correct themselves in a matter of maybe 6 months, 1 year kind of a time frame. And now when you look at the gold silver prices, you're now looking at 4,200 approximately for the gold prices and 63, 64. So which means almost a 100% jump in the silver prices in the last 6 odd months and a 30% rise in the gold prices. This has brought the ratio from 104, 105 to almost 67. Interestingly, the 67 is the mean for the gold silver ratio the last many years of chart performances. This along with the short term of the quarterly charts for silver prices. Now interestingly, we've seen the parabolic kind of a move happening for silver prices, but this move is now getting a little bit into a frothy or a euphoric zone, because you can look at the red line over here. This is the 3 standard deviation band for silver prices on dollar terms on the quarterly charts, and we are above the 3 standard deviation band. Historically, whenever that has happened, we've seen silver prices moderate from here on and go into a patch of a multi-quarter consolidation. So my sense is that a major part of the rally, which was there due to statistical abnormality for the gold silver, I think that's shaped up. Now we could be at a point where the silver prices may go into a potential multi-quarter consolidation from here on.
Okay, excellent. And Kunal, sorry, one more follow-up. If I were to extrapolate this chart maybe over the next 2 years, I recall that during some you suggested that silver will hit 2.5 lakhs, at least in India.
Yes.
That by next Samvat, of course. Correct. That was your prediction. Expected? I'm just trying to get a sense.
Yeah, absolutely, Harsh. Okay. So this tells you that from 1,60,000, where we predicted that the silver prices will tend to outperform, we've already hit 2 lakhs. Now for the next couple of quarters, we should moderate, but the trajectory will still be on the upside. It's just that we are now into a slight frothy zone, so it calls in for some sort of a cool-off over here before the next trend picks up.
Okay, perfect. Great. Thank you so much, Kunal, and thanks for overshooting your stay. Have a great weekend. Now, in terms of, let's also take a view from Aditya. Aditya, do you at all track gold, silver? Do you have a view with regard to precious metals?
Honestly, Harshbhai, we don't have a view as such.
Okay.
But we do tell it to clients, a small part of the portfolio, yeah.
Sure, no worries. Okay, insurance. And we're focusing on insurance because the cabinet is set to clear the Insurance Law Amendment Bill 2025. The revised bill is set to include open architecture, composite licensing and 100% FDI. Mind you, that's both of those, composite licensing and 100% FDI could be key. My colleague Anurag Shah here with more.
So finally, Cabinet is all set to clear Insurance Act Amendment Bill, and after the Cabinet go ahead, bill will be tabled in the Parliament, and will get the final node of Parliament, and it will be a insurance new act will be there, and which will allow open architecture for insurance companies, for individual agents. Then 100% FDI will also, it was already announced by the Honorable Finance Minister in budget, so 100% FDI will be reality. Then there are another provisions also, the Section 35 of Insurance Act, which is likely to be removed. Then after this, it will the merger of insurance company with a non-insurance company will be smooth, and it will be beneficial for companies like Max Financial Services. So Axis Max Life will convert into a listed entity if the merger happens. So these are the major points of the Insurance Act Amendment Bill, which will it's a major reform for insurance sector, but open architecture, which is a negative for life insurance companies like LIC, SBI, ICICI Prudential, because for LIC, more than 90% of their business is through individual agents only, and open architecture will pave a way for LIC agents to tie up with other life insurance companies also. But the insurance reform will also have reforms like value-added services. Insurance companies will be able to offer value-added services also to the customers. And the mega reform, which we were waiting from last 4 years, but finally Cabinet is all set to clear the insurance bill, and after that it will be tabled in the Parliament.
Okay, the insurance amendment bill, once again, it seems that the cabinet clearance could be in the works very soon. But let's welcome on board Aditya Kondavar as well and figure out what he's making of the market. While it's turning out to be a good day so far, it's sure been a choppy ride for us. Aditya, hi, afternoon. I guess the question on everyone's mind is, when do small and mid caps pick up? When do you see a more meaningful across-the-board recovery, Aditya?
So, hi, good afternoon. So, I tweeted this a few days back that, death by 1,000 cuts is a quote that small mid-cap investors have experienced through the past 14 months of the markets, right? I think the biggest trigger that will be there for the markets and obviously the small mid-caps to move will be the trade deal. Now, fortunately, on that part, a lot of news flow has come from the ministry. Mr. Piyush Goyal has spoken about a number of FTAs that they are in the process of finalizing. Number two, our honorable Prime Minister had tweeted last night saying that he had a warm and engaging call with the US President. And obviously, the CEA and the Commerce Ministry have also stated that if a comprehensive trade deal with the US is not signed before March, they would be quite surprised. And obviously, a lot of back and forth has happened on that front. So we are hopeful that things should start stabilizing in the next 2 to 3 months. And obviously, a quarter or two after that, I think small mid caps should start picking up.
Okay. Aditya, what do you make of the rally in auto, and where are we placed with regard to auto now that this rally is complete? Do you have a preference, two-wheeler, four-wheeler, CV? How do you play auto, or is it through auto Enk maybe, or tires? How exactly do you play it?
So Harsh bhai, auto and auto Enks, you also quite very well know that it has been one of my favorite sectors. It has created wealth for me. So for us, we hold both autos and auto ancillaries, and obviously none of what I say is a recommendation to any of you. But what the government did was it gave a huge consumption boost or a demand boost to all of these companies, right? Auto being at the forefront of it. In fact, Maruti management has repeatedly said that they have this thing called a helmet indicator. So people who come to their showrooms have a helmet on the sales desk. So that basically denotes that a lot of people are now upgrading from two-wheelers to four-wheelers. But coming to your question, we are bullish on both PV two-wheelers, and we are bullish on both OEMs and ancillaries as well. Because there's a simple calculation that a 1 rupee change in OEM sales would be a more than 1 rupee change for the ancillaries, right? Because the delta for them is much higher. Ancillaries are much smaller companies in terms of market cap and all the other numbers. So obviously, incremental 1 rupee change for them brings about a far greater change in the market cap. So leaning more towards ancillaries, but then again, we are again bullish on OEMs. Yeah.
Right. Okay, hang on there, Aditya. Lots more to talk about. But guess what? Superstar Rajinikanth turns 75 today, marking another milestone in a very legendary career, to say the least, that has defined Indian cinema for nearly 5 decades. From early morning fans gathering outside his residence, performing Pal Abhishekam on his posters and bursting crackers in celebration of their Thalaivar. Social media has also been flooded with tributes as celebrities, politicians, industry colleagues shared heartfelt messages thanking him for his unmatched contribution to cinema. From, of course, iconic dialogues to unforgettable characters, Rajinikanth's influence transcends generations, and on his 75th birthday, the outpouring of love reflects the enduring magic of a star who continues to command hearts across India and, of course, beyond as well. So, here's wishing him happy birthday from all of us.
Welcome back, and thanks for staying with us. Now, the insurance bill has received cabinet nod, and that's the big news that's coming in at this hour, breaking on ET Now. Let's quickly take it across to Aditya. Aditya, your view with regard to insurers. What this does is, of course, bring in the optionality for insurers to do life and general within the same fold, which is a key positive for insurers like an LIC. And it also brings in 100% FDI as an optionality. So it brings in new foreign investment into insurance as well. And therefore, that will likely mean that some stakes will be up for grabs, especially in the listed space. Is this a space that you track closely, and any stocks that you're liking from a risk-reward standpoint within that insurance pack?
So to be very honest, I don't track the insurance space, but obviously this is a great news. In fact, we saw recently that Mahindra and Manulife, after their mutual fund business, are now getting together to form an insurance joint venture as well. So I'm sure some reworkings will happen on that front. And like you correctly pointed out, I think a lot of listed companies' stakes would be up for grabs. I think overall, a very positive for the sector.
Let me welcome on board Nitin Teja as well, as we're covering the fact that Cabinet has approved the 100% FDI in insurance. Nitin, prima facie, the impact on insurance as a sector now that the Cabinet has okayed 100% FDI?
Hello. Hi, can you hear me?
Yes, we can hear you loud and clear.
Sure. So I think this was in the works, and most insurance companies, in fact, we had met a few of them just in the last 1 month, are very happy and welcoming this move. If you really look at most of the insurance companies from a perspective, all of them are businesses which generate a fair degree of cash. They are well capitalized as such. So in the sense that, when you talk about foreign, so some of the weaker guys would probably benefit with this FDI move because, they will probably need to beef up the capitalization. But the large private insurers in the business are fairly well capitalized. They have a huge network. So it's not going to be easy for anyone to come in and substitute. But what it is definitely going to do is it's going to drive a deeper penetration, because as you see some of them coming from an education perspective, from a rise in distribution and so on and so forth, it's going to drive more penetration. So as a country, it's very good. But at the competitive level, I find it difficult to believe, at least in the short term, any of the top 5 being sort of disrupted from there. The other element where you have general insurance and life being allowed to be done by the same company, I think that's probably going to give some of these companies a big benefit of scale as they go ahead, because they, now they can use the same infrastructure across both of these companies in terms of costs and so on and so forth. So I think that is pretty well, as it's in that sense, I think this is very good for insurance. Any which way, I think the worst of insurance regulation is behind us, and we are very positive on insurance as a sector as we look ahead.
Nitin, what else are you seeing in terms of sectors which you're finding interesting?
Well, from a sector perspective, when we look across, we clearly are seeing that one big area is consumption, which should continue to do well in our view, especially led by all these measures. I think this quarter is going to be good. One has to see how this sustains as we go ahead. I think the other element is, banking and financials, and within that, I think we're probably going to see the NBFCs do better, because there was an expectation that there's going to be a bottoming out of the rate cycle in this December quarter, but now it looks like we could probably have one more rate cut, and that, so the bottoming out of NIMs for banks could probably be delayed by a quarter or so. So I think NBFCs should do well. I think the capital market players would do well, especially the AMC business will continue to do well. It's a structural compounding story that one sees. Again, power T&D is another area that looks interesting. But at a more larger level, I think this is once again going to be a bottom-up year in the markets, wherein you're going to see individual stocks do far better than the broader indices.
And within discretionary, Nitin, is there a preference or a tilt that you have?
So within discretionary, I think, while at one level premium discretionary will continue to sort of grow. In our view, it's an all-weather theme because the consumer in that bucket is less prone to the vagaries of inflation or interest rates and so on and so forth. But I think the larger growth is going to come from tier 2 and tier 3 consumption growing. And that is the bucket where even the government is driving tailwinds.
In fact, you know what? I'm going to take it across to my colleague Anurag Shah as well. He's been reporting on 100% FDI in insurance. And Anurag, now the cabinet has finally cleared it.
Yeah, so 100% FDI in insurance sector. So it's a major reform in insurance sector. And after this 100% FDI, we'll see going ahead, a lot of foreign companies will set up their insurance company in India, because previously when FDI limit was up to 49% and 74%, foreign insurers were not showing much interest and they wanted a complete 100% control in a management control and the leadership control. That was also given a few months back with the amendment, and now with the 100% FDI, it's a major reform. It was announced by Honorable Finance Minister in the budget, but it's a cabinet has cleared it, and now this will be tabled in Parliament for the Parliament node. Other than that, the other two major announcement also coming in is related to the Insurance Act Amendment Bill, which proposes of a composite license in which life insurance companies will be allowed to sell non-life insurance product and vice versa. So going ahead, we'll see that life insurance companies like HDFC Life, SBI Life and other life insurance companies, they will be able to offer non-life insurance product also, property insurance, indemnity health insurance. That is also part of the proposed bill, Insurance Act Amendment, open architecture for individual agents. So it's a negative development for LIC, because presently rules allow in a one segment only agent can tie up with a one insurance company only, but after the open architecture an agent can tie up with a multiple insurer. So negative for companies like LIC, SBI Life and ICICI Prudential. Other than that, value-added services also part of the Insurance Act Amendment Bill. So insurers will be allowed to offer various services. So I'm joined by Nilesh Sathe sir. Sir, long wait is over now. We have seen that Cabinet has approved Insurance Act Amendment Bill. What is your first reaction? Because we have seen that draft came in year 2022 and now finally it got the Cabinet approval after a lot of deliberation and stakeholders consultations.
Yeah, I'm very happy that finally cat is out of the bag, and it will now be placed in the Parliament session, and hopefully it should be through. Whatever was proposed has actually been placed, like FDI increased to 100% and open architecture and composite license. So there is no modification to what was earlier proposed. It will have impact on industry. One, with 100% FDI, there is a possibility more insurance companies may open their shop here, and they will bring with them the expertise that they have in other countries where they are operating. Customers will have more products, better products, and with open architecture, the agents will be in a position to market the products of other insurance companies also.
State life insurance company like LIC, because 90% of their business is through individual agents, and now the same agent will be allowed to work with other insurance companies. So do you think it's a very big negative for LIC?
It is certainly a negative for LIC. Moreover, the structure that they have is they have developed process to recruit agents, and till now they were tied agents. Now developer also will make efforts in recruiting them, and they may sell products of other insurance companies for which he will not get any credit. So it's certainly a negative for LIC, and also for some companies which had good number of agents, tied agents, like SBI Life and Tata AI and maybe ICICI as well. But anyway, this has happened finally. Then the third is about composite license. This is positive for LIC because he had earlier also announced that when it will be allowed, they will enter the health insurance sector and maybe general also. So this is positive for LIC because the agents of LIC who were selling products of other insurance companies when they wanted to sell general or health, now they will be in a position to sell the products of LIC itself in motor and fire and health, etc. once the regulations are finalized by IRDA. So good, finally it has been approved by cabinet, and it will be placed before the parliament now, and will be approved, I'm sure. It may take 6 months for them to be actually implemented, because a lot of regulations will have to be drafted now, and that is going to be a Herculean task for IRDA.
Indeed, it would be. Mr. Sathe, thank you so much for your time today. Anurag, I'm going to request you to stay in here. But there's also, Cabinet has also cleared the nuclear bill. What does it really imply? What are the nitty-gritties? Let me quickly take it across to Samir Dikshit as well. Samir? Okay, we'll get back to Samir in just a second. But the cabinet has given its nod to enhance nuclear energy capabilities. It's the Atomic Energy Bill, which has been passed now. And yes, you know, we've been talking about as to how a lot of companies or how the government's thrust is now on finding more and more sources of energy. And atomic energy definitely was something which was being mulled upon. Okay, Samir is with us. Samir, hi, afternoon. Can you hear me? Tell us more about the Atomic Energy Bill.
So yes, a very important cabinet meet today chaired by Prime Minister Narendra Modi, and there are a couple of important bills that will be taken up and that might be approved. The first one, which we are picking up from our sources, is the nuclear energy bill that might be approved by the cabinet. And the biggest highlight of this nuclear energy bill is that it will open doors for the private sector. Now, government understands that the private participation will not only help to increase the efficiency, bring more competitiveness, but will also help to ensure the energy requirement of the country. Moreover, this will also help to move the economy as well. Now, nuclear is something where Modi government is actively focusing on to have at par with the global standards, and nuclear energy bill might be approved by the cabinet. Now, this is not just one of the bill. There are a couple of other bills also. For example, the higher education bill, which might be taken up by the cabinet, and this higher education bill, one of the key highlight is that the number of regulators are there in the education sector, whether it be the University Grants Commission, UGC, or the AICTE, similar sort of regulators. These all regulators will be brought under one umbrella. So a unified, a unidirectional approach government wants to have for the regulating of the entire education sector. Government understands that this will help to increase the quality as well as the credibility of the education sector. In addition to this, we are also getting to know that Manrega, MNREGA, Mahatma Gandhi National Rural Employment Yojana, the name might be changed. It will be renamed to Puj Bapu Gramin Sadak Yojana. That might be on the cards, and it might be approved by the cabinet as well. In addition to this, another gift or some sort of relief might be extended to the farmers in the copra space. MSP for copra might be hiked significantly, and this will be very much beneficial for the farmers as well. So these are a couple of important bills, but let me also add that insurance bill will also be taken up by the cabinet. It might be approved, and insurance bill is very important because this will open more doors in the FDI space. Once approved, the insurance bill will be moved to the parliament for further further clearing in from the parliament as well.
Thank you so much for that, Samir. We'll let you go. And of course, some of those stocks buzzing on the back of that. You can see L&T, of course, has been perked up since the morning, but BHEL, Walchand Nagar is the other one, which has absolutely flown away in trade, 12% high on the back of that, of the passing of this bill. Okay, now switching focus though, from builder to cloud player, Anant Raj is mounting an ambitious data center push by 2032, backed by real estate cash and a proprietary cloud strategy. The company is betting that co-location and cloud together will power its next big growth story. In this edition of the interview, we caught up with the managing director, Amit Sareen, to understand the company's data center roadmap, revenue visibility, and the capex behind this big transformation. We'll slip into a break post this, but listen in to a slice of that conversation.
Once the whole revenue comes in, we are going to comfortably cross about almost 650 crores of revenue only from the data center segment. And this will further keep on going because the capacity will also then keep on increasing. So as of now, we started with 3, then we took it to 6, and now we are at 28. This 28 next year will go to 63. As of now, the major revenues are all coming in from the real estate business. But from this year, data center has substantially started to contribute. So once the capacities start getting revenue from our capacities, this will start climbing up.
GMDC soars after it partners with mining firm for Baitarni West Coal Mine in Odisha. The company also managed to obtain key statutory permissions from the government.
Fairfax Financial has emerged as the frontrunner to acquire a controlling stake in IDBI Bank ahead of the Centre and LIC's December end bid deadline, according to the Economic Times. Fairfax is competing, remember, with Kotak Mahindra Bank, which is weighing a cash and share offer, though the bid timeline may spill into early January.
Silver continues its record-winning streak as global prices rise above the $63 per ounce amid tightening supply and the recent Fed rate cut. Players like Hindustan Zinc and Hindalco are soaring in trade on the back of this boost.
And November CPI is expected to rise 0.7% month-on-month, according to a poll marking the 10th straight month of inflation below the RBI's 4% target. Analysts cite fading base effects and a seasonal uptick in food prices.
ICICI Prudential AMC is 10,600 crore rupee IPO opens, backed by a strong anchor book featuring GIC, Temasek and the likes of Prashant Jain, Manish Chokhani and Madhukela. The IPO has been subscribed over 30% so far on day one. Okay, welcome back, and you're watching Closing Trades here on ET Now. We have with us Amardev Singh, who's the Senior Vice President at Angel One, joining us at this point. Amar, what are you spotting in terms of charts? Anything in terms of specific stocks that you're liking at this point? We're just about 15 minutes from close, so just taking your picks right off the bat.
Yeah, sure. So the first one to look at is Eternal. So we've seen a spectacular rally in this stock, and then the stock has corrected from almost 360 odd levels, 370 odd levels to currently trade sub 300 levels. So we are seeing that it's finding some very strong support around the level. So there is a pullback which is expected in the stock. So this is one stock one can look at buying at the current levels for an upside target of 323 from a short-term perspective. That's roughly around 10% and a stop loss of 279. And the second stock to look at is from the pharma space. Again, this is one stock which had a spectacular rally, has been a multi-bagger, but then has been witnessing some sort of correction over the last few weeks. So this is Fortis Healthcare. So what we are seeing in the stock made a high of almost 1100 levels. Currently, it's around 870, 875 odd levels. And on the longer term charts, the stock continues to remain strong and positive because the momentum and the trend is very strong. So this is one stock which can witness a pullback from the current level. So again, more of a short-term trade one can look at buying at the current levels for an upside target of 923. So that's roughly around 7-8% from the current levels with a stop loss of 843.
Right. Okay, Amar, great to have you on the show. We'll let you go on that note and talk about the markets right now. L&T definitely has been one key heavyweight which has pushed up the index today. And it was after the Goldman Sachs upgrade on the stock, citing stronger execution and clear re-rating opportunity as well. Let me take it across to Kanishka and find out the rationale on that note.
Absolutely. Stellar moves is what we have seen in L&T today. This one on the back of a global Goldman Sachs report that has come. Very bullish view. It has upgraded the stock to buy from a neutral rating earlier, and the target price also has been raised to 5,000 rupees. That's up from 3730 earlier. So a major target price upgrade over there. Now, why? Because it believes that L&T is leveraging capability into opportunity to drive a re-rating. It also has a very strong order book alongside low working capital and optimizing capital allocation. All of these factors are going to drive growth for the firm in the FY26 to 28 period. Apart from that, the brokerage expects margins to improve significantly and also support earnings growth through FY28 to 30. This, like I said, would be backed by a key execution cycle. It says that L&T is poised for new areas like defense, green hydrogen, and also nuclear power. Currently, they form about 4% of the order inflow that the company has, and going forward in FY35, the brokerage believes that this would be about 15% of the order inflow share. So very positive development over there as well. In fact, it sees healthy order backlog and increased confidence in domestic capex recovery coming in from L&T, which would be a key driver for the company. It sees clear growth visibility for the near, medium, as well as long term. So yes, very positive moves, very positive, highlights or growth drivers that L&T has, and hence it's been rallying in trade today.
Okay, and that's with regard to L&T. Aditya, I wonder if you have a view with regard to L&T.
So we do have a positive view on the company. They're doing a lot of new age sectors. I think the MD of the company also came with quite a detailed article a few weeks ago saying that, L&T is going to be all about new age sectors. So they're getting into semiconductors, data centers. Obviously, defense has been a big play for them from quite a while. I think they unveiled a new tank as well called Zoravar recently, which is one of the, leading lightweight tanks in the world today. So definitely positive on it, Harsh Bhai. And when we talk about India's infrastructure story, I think L&T plays a crucial role in it, be it the roads, be it the heavy engineering, or be it defense.
And Nitin, do you have a view? Cap goods, L&T in particular, also there's Siemens. Anything that you like within the cap goods space, ABB and the like?
So I think, where there is private capex plays, I think that you can yet wait it out because there is no clear signal of that happening. I think broadly, if you ask me within the cap goods space, the two clear spaces that we like is what has got to do with power, and that's more specific power transmission. I think that's the area that we continue to like and think there is good room for growth.
Indeed. And also now with the new atomic energy bill, Nitin, do you sense defense is going to once again be in the spotlight?
I think defense is once again going to be in the spotlight. I think it's had a fair share of correction. And, it's if you ask me now, defense is a big long-term theme which will continue to play out. We live in a geopolitical world where you continue to see the unexpected happening more and more often. But I think that's one part of it. But again, even for the nuclear power sector, reactors become very critical. So I think you will once again see some of these large engineering companies catering in the power value chain, being in the limelight.
Okay, shifting focus though. Siemens, on the back of its analyst meet where key concerns were discussed, Kanishka here with more with regard to what was the conversation there. Kanishka, what do you have for us?
Absolutely. So Siemens did hold its analyst meet today, and some big concerns have been highlighted by the analysts that we have spoken to. Let me take you through all of them. First up is that there's no guidance that has been given for any of the segments. Then there's uncertainty on capex momentum going forward, and within segments, it's the digital industries segment where margins could decline due to their linkage to transfer pricing. Now let's see what's with regards to digital industries concerns. Now this segment's margins, they are now expected in the 6 to 8% range. They're sharply down from that 12 to 14% range. Why? Because there's no localization in this segment yet. These margins are linked to transfer pricing. And apart from that, small India manufacturing is just started. So more localization is planned, but it's very limited right now, and that could hamper the margins for this company, for this segment. Private capex, that has also been weak for this segment over the past 5 years. So yes, those are some key drags this segment, and why it matters. Why? Because the DI segment focuses on industrial automation, digitization, and contributes to about 20 to 25% of the top line. So yes, it is significant when that margin growth is likely to come down to that 6 to 8% level. That's the change over there. Apart from that, if you look at capex commentary, it's a mixed stance. The private sector capex, that remains muted. Uncertain if that capex is recovery that we have seen in the past few months, if that's going to sustain. However, they still have pointed out that from April to June, that's when the capex, private capex, could actually start picking up. So yes, some key announcement over there. Apart from that, the stock did take a hit following that 6 to 8% DI segment margin that is expected. But there are some key positives as well, as we have spoken to analysts, and they've pointed out that the commentary is largely turning less cautious now over the quarters, especially with respect to capex, since that is going to pick up in the April to June period. Apart from that, smart, that's also likely going to continue its 20% growth. M&As and capacity expansion, that could be likely in this segment. And mobility revenue, that is also going to see a pickup. So yes, mobility and smart infra, these are going to be the key drivers for this company. And if you remember, earlier in the week, we saw its low voltage motor business. They are going to sell it for an amount of 2,200 crore rupees. These were the two drag segments, LMV and DI. And now with the sale of this one segment, they are going to get in 2,200 crore rupees. So yes, that's going to be a big capital for the company that it could utilize. So yes, some positives as well, while capex, that remains a key drag, as well as the DI segment, that is the digital industry segment.
Right. Well, not just Siemens, but look at a BHEL, for instance, perhaps more to do with the atomic energy bill getting cleared, because that's the one which is seeing a meaningful move. We were already flagging off for Walchand Nagar Industries. That, of course, is gapped up quite a fair bit. Any other stock, Harsh, that you may be spotting?
Yeah, L&T, BHEL, Walchand Nagar, those are the key high impact stocks on the back of this news. Nitin, I wonder if there are any other counters which you might keep on your radar, given this, because there'll be a slew of other second order impact counters which will likely come into the picture because of this, you reckon?
Asking that.
Sorry, yes. Nitin, that was for you.
When you look at it from a second order context perspective, once again, when you set up capacity of different types, whether it's nuclear, whether it's renewable or traditional thermal, ultimately, I think the connectivity is the most important part. And that's where I keep on saying that, one of the key challenges in India is going to be the transmission grid. So I think whether it's transformers, whether it's cables, whether it's EPC companies within that value chain, I think all of them should be the second order beneficiaries of this.
Okay, Nitin, we'll let you go on that note. Thanks as always for taking the time out, and apologies, just so much news flow. Our conversation got a little truncated, but let me welcome on board Mr. Chakor Doshi from Walchand Nagar Industries, joining in on the show right now. Mr. Doshi, hi, afternoon. Thank you so much for your time. Just wanted to understand, with the atomic energy bill getting now passed, how much of your revenue pie actually gets impacted because of this?
This field is something that has a long duration period. Yes. Nothing will happen in 6 months, 12 months or so. It all takes a long time. But that said, this vertical of ours will certainly have a long
period of activity. And that's for everybody who's in this business.
Right. Mr. Doshi, this is Harsh here. What does that mean, therefore? I'm just trying to understand the macro setup. How well are we placed from an India perspective to tap into the kind of opportunity this opens up us up to? And what are the key players or what are the key segments which will come into the fore as a result of this? Could you give us a sense?
Well, Walchandnagar is well placed. We've been in this field for the last 50, 60 years. So Larsen and Toubro and Walchandnagar are the key main old players. But this is true for India as a country. This is the way to go, considering the latest geopolitical situations. And I think the government's taking a positive decision.
You won't be in a rush to already up your capacity, would you?
This has been being discussed for a while, and we've done some work towards that, and thought processes are already in place. So, yes, now finalizations and all that will happen. But like I said, this is a long play. This is not like some decision gets taken and 6 months it starts showing up.
Oh, yeah, absolutely. Mr. Doshi, we completely understand that. But trying to understand how well placed we are for the order flow to start to trickle through. Will that happen immediately? Will it take a quarter or so to happen? Will it be 2-3 quarters? Will it be FY27 end?
Yeah. I think it will take longer.
Okay.
Because you have to understand, this is one nuclear plant is a huge, huge activity. And this has to be well planned. There are many players in it, including government, which plays a very serious and an important, significant role. So it will take its own time. But I think after a large gap of 10, 12 such years, this is back on the track.
So could you give us a sense, Mr. Doshi, and pardon our curiosity, just trying to understand how this works? Because when you say that, these orders take a very long time in terms of their gestation period and fruition, typically how long a time period are we talking about?
If government takes decisions, then it goes through its processes and it can take, I would not want to speculate how they will perform in terms of speed. As far as private sector, if it is allowed to get into it in ownership of such plants and or running of such plants, then that's a new one for this country. And it's bound to take some time to put all the thoughts and processes and checks and balances in place before placing the orders.
Right. Thank you so much, Mr. Doshi. We're going to leave it at that, but we'd love to have a larger conversation with you because you're right in the eye of the storm. So we'd like to understand this entire sector as well as the opportunity better, and we will invite you for that. But thank you so much for taking out time and speaking with us today. Let's go across to Snehi for wrapping up the day of trade. Snehi.
Well, absolutely. Very good day of trade coming in. Some heavy announcements coming in from the Parliament. The approval of 100% FDI and insurance, and now the atomic energy bill also has been approved. Some stocks that were buzzing on the back of that. All life insurance companies doing well. You have Walchandnagar Industries, like we were just speaking to, doing well on the back of the atomic energy bill. But other than that, 0.5% uptick on the nifty, 0.5% for sensex as well, ending the week on a positive note. Advanced decline ratio looking good. Broader markets looking very solid. All sectors in the red barring FMCG, and top gainers today are metal and realty. With that, we'll wrap it up and back to the studio for closing comments.
Okay, thank you so much for that, Snehi. And, we'll have an eye on the November CPI. That's going to be the big number that we'll look for, even though I don't expect it to be too big given the last couple of months in terms of data that we're staring at. So it's not likely to be a very big number. But November CPI is surely going to be in focus. And before I toss it across to Rabinder for a quick outlook, let's go across. Aditya, what are you expecting in terms of policy? We've had a 25 basis point rate cut which got delivered this week. In your opinion, do you believe that the macro trends will continue to be very, very favorable to India, both from a rate cut perspective?
So Harsh, I definitely feel that another rate cut may be on the anvil, but as we very well know, RBI takes its own time. They are quite nimble, not very quick in terms of policy making. So after the 25 bips of rate cut that happened recently, I think they may take some time to reread the economic trends. They may take some time to read the statistics, and then maybe they will take a call on the 25 bips rate cut. Also, the thing is, the 10-year yield that is there on the 10-year bond today, it is at 6.60%. So it has, in fact, increased after the 25 bips rate cut, right? So RBI has taken a good step of conducting OMOs and obviously the rupee dollar swap that they have announced for $3 billion. So I think the number one thing that they will do is to actually ensure that the rate cuts that have happened this year of 125 bips are actually transmitted to the corporate and the consumer sector, right? And then maybe after that they will ensure that another 25 bips is being cut.
Okay, Aditya, we'll thank you, and it's been a day of trade where we've had plenty of breaking news. Therefore, it's been tough to hold a conversation. But what we're going to do, viewers, is we're going to tell you a goodbye. By the way, the CPI projection for this month of November is going to be 0.7%. That's the likely number that we are penciling in. But we'll wait and watch. At 4 p.m. we will have that number, and we'll see where that takes us going forward as well. But for the moment, from Aisha, myself, and everyone who puts this show together, wrapping up the day and wrapping up a very, very happening week, especially on the macro front, it's a goodbye from all of us.